And that's how we short stocks, gang. I'll see you on the charts. I just finished my radio show, Phil's Gang radio show, and I want to share with you what I shared with my radio audience, my listeners, on you got to learn how to short stocks. It's a must. It's a must. Okay? But we first got to understand, before we learn how to short, we got to understand when to short and what's going on. When do you know when to short? That's important. And by the way, don't listen to these gangsters on Wall Street that tell you, don't short a stock, you can lose all your money. They're trying to scare you to death. Don't listen to them. That's not true. What they want you to do is be scared so you don't do it. And why? Because they don't make money when you short a stock. That's selling a stock. They only make money when you buy a stock. So don't listen to them, okay? It's like cost averaging down. Never do that. Hey, I bought a stock at 50. They call you and say, hey, you know what? I can get you more stock at 30. That great stock at 30. Huh? It went from 50 to 30. That's a great stock? No, you never cost average down. That's ridiculous. That's nuts. You only average up. But let's talk about shorting. But to learn about shorting, you got to first understand when to do it. Okay. So first of all, here's the economy right here in green going up. And here's the economy in red going up, the stock market in green going up. That makes sense. We have a good economy. When you got debt that's low, if you got debt that's high, it puts a drag on the economy, doesn't work. This is setting up beautiful. And when you have a good economy that's growing, and you'll have a good stock market, you have good earnings. And see this here? When you have good earnings, the key is that if you have more earnings than the amount of shares you have outstanding, your stock goes up every quarter. So when they report in a quarter, remember, you always got to have more earnings than you do shares. And as long as that happens, your stock will keep going up. Beautiful thing. But what happens if you have earnings that are less than your outstanding shares? You can't cover your outstanding shares. You got a problem. Every quarter, your stock goes down instead of up. So they don't want that to happen. So they financially engineered the market to keep going up in this situation when you got less earnings. How the hell they do that? I'll explain. First, let's go take a look at what's going on today in the market. Okay, today what we see in our market, it looks just like this. We got the economy that is going down. Look, economy is going straight down. That's our GDP. And the stock market goes up. How the hell do they do that? And how do they get the stock market price to go up? Remember, I told you got to have more earnings than shares. Well, in an economy that's going down, you're going to have fewer earnings and more shares, and you can't cover it, so you're going to lose. So this is called financial engineering. So what you do is just understand that what they do is financial engineer by reducing the amount of shares. So they print money, and the CEO gets those shares, gets that money, and buys their shares down. And when they buy their shares down, what they end up doing, remember, in buying those shares down, they turn around and they just simply, they engineer it so they keep buying the shares down. Hey, there we go. Okay, so now their shares, guess what? They're in good shape, right? Because now their earnings can cover their shares. So instead of stock price going down, the stock price is going to turn around and going up. Boy, it's just like magic. Isn't that amazing? Turns go the other way. So here's the bottom line. You got to learn how to short, because we got a market that continuing going up. It's fake. Because the way they push the market up is they artificially print money and take and buy down the shares they have. They keep buying their shares down every quarter. And so as long as the earnings are covering their shares, but that causes a problem. It's a bubble. Economy going down, stock going up, that's a bubble. Are you kidding me? And we got the biggest bubble ever. In fact, if we took away all the stock buybacks, the stock market, the S&P would be halfway up. We took all the stock buybacks down, would be half what it is. So next week, I'm going to show you how easy it is to short a stock. It's so simple, especially with my technology. It works, and anybody can do it. A child can do it. So again, remember, don't pay attention to people tell you not to sell stock short. You first got to understand, as I taught you just a moment ago, what makes a stock market go up when it shouldn't be going up and the economy's going down. I just explained. The earnings, okay, have to be more than the outstanding shares. If it's not, they artificially print money, give to CEOs, and they buy their shares down, and that way there every quarter the stock goes up because they cover it. And it used to be a crime. It used to be a felony. But next week, I'm going to show you with my technology, so easy to short, you'll love it, okay? So that's it. Again, remember, you got to learn how to short a stock. You would never buy a car without reverse. Why the hell would you get in the stock market without reverse? See you on the chart next week. Going to be exciting next week. I'm going to show you so easy. Anybody can short. See you on the charts.